Hi there, welcome to kneppyinvests. Yesterday I released a video on assessing some of my recent trades, and I thought a good follow-up video would be looking at potential buys that I see on the market right now. And I'll provide 7 potential buys looking at 2 ETFs, 3 breakout potential stories happening right now, and then 2 buy the dips. One of the buy the dips is on a really good company, high quality company, while the other potential buy the dip has significantly higher risk. This company is going through a potential serious issue right now. But if this issue is not as serious as the market is anticipating, definite value at current prices. Now, I don't usually talk about ETFs, but I will feature one popular ETF, probably one of the most popular ETFs on the ASX, and also what I consider to be the best quality ETF on the ASX. So let's get stuck into it and look at those 2 ETFs that I think are potential buys right now. The first potential buy ETF is NDQ, which is the NASDAQ 100. This is probably one of the most popular ETFs on the ASX. People love this area. People love the top 100 companies on the NASDAQ. They love the Apples, the Microsofts, and all those sort of companies, the Alphabets. And this is the weekly chart for the NDQ going back to June 2015 when it started trading on the ASX. And really, it's been a spectacular story over the past 7 years. The share price of NDQ has just been going up. I've also included the 50-week and the 100-week moving average on this. And it's really interesting to see that the 100-week moving average is the natural support level for the NDQ. We have seen it reach that moving average 2 times in the past, back in late 2018 when there was a little bit of fear in the market that interest rates might rise, and also during the COVID-19 financial panic. The NDQ actually went down back to the 100-day moving or 100-week moving average. And right now, the NDQ is sitting right on the 100-week moving average. So this is a potential buy the dip opportunity. You are buying the NDQ about 25% at a lower price than it was just a few months ago. So a lot of companies in this particular sector in the NASDAQ 100 are experiencing some issues with their share price. Even those big companies, those Apples, Alphabets, I think Apple might be the best looking or strongest looking company right now when you just look at the charts in isolation. But simply because the share price right now of the NDQ is sitting at that natural support level, and to be honest with you, we only have 2 sample sizes in the past of when this happened, but just because it is right at point now, this could be an interesting buy. Now, NDQ is not my favorite ETF. My favorite ETF is the next one, and that is the NASDAQ, or the NDQ, is just looking or focusing on the NASDAQ top 100 companies in that. The QUAL is worldwide, apart from Australia, so ex-Australia, and he's looking at quality companies all around the world. I had a quick look at what they describe as being quality, for instance, return of equity, that sort of thing. And a fairly similar chart when you look at the QUAL compared to the NDQ. Now, the QUAL goes a little bit further back. It goes actually back to 2014, but ever since it listed on the ASX, the QUAL has been going up. And in actual fact, there was a comparison between the QUAL, so this is VanEck, the VanEck QUAL ex-Australia, compared to the VanEck ex-Australia without that QUAL distinction. And the QUAL has been significantly outperforming the non-QUAL VanEck ex-Australia ETF. And just like the NDQ, right now, the QUAL is sitting at the 100-week moving average. Because we have a little bit more sample size with the QUAL, we actually have seen the QUAL hit the 100-week moving average 4 times in the past, and each time it has hit that 100-week moving average, we have seen it rebound and move up. Now, the QUAL has seen a significant drop in its share price over the past few months, dropping from $45 to a current share price or price of $36.94. So that's a nice 20% drop in the QUAL as we speak. And the last time it was this low was back in the middle of 2021. So this is a potential another buy the dip opportunity with a quality ETF. In fact, probably one of my favorite ETFs on the ASX. Probably just also mention with the QUAL, if it continues to fall towards about $34, this would be an extremely enticing buy, because $34 was the high that this ETF reached just prior to the COVID-19 financial panic. And we saw the QUAL ETF actually move sideways in or around that price during the end of 2020 to the start of 2021. So that would be a fairly good support level right on $34. So it's not far to go from here. And if I see it moving more and then consolidate around that level, that would be a really enticing buy for me. Now onto some individual companies, and we're going to be looking at potential breakouts. And two of these potential breakouts, so no shock or surprise, are gold companies, lower quality gold companies, but there could be some value here. The first one is Dacian Gold. Now, there was a potential breakout with Dacian Gold back towards the end of 2020 and 2021. We did see share price increase quite substantially in a very short period of time, but that turned out to be a false breakout, and the share price has plummeted from a high back then, which was about 57 cents, to a low of around 16.5 cents. But the share price has started to move up. Looks like it is moving up into an uptrend. The most recent high was higher than the previous high, and also higher than the highs we saw back in late 2021. We're also seeing lower lows as well, and the moving averages are starting to turn around. This is the 50-day and 100-day moving average. So definitely we might be seeing a shift in sentiment, a shift in trend with Dacian Gold. Now, the share price of Dacian Gold will be highly correlated to gold prices, and gold has broken out over the past few weeks. Whether the gold prices continue to rise is not a certainty. So you will have to keep close eye on gold prices if you decide to take a position in Dacian Gold. But things are looking up for not only Dacian Gold, but also other gold companies, including St. Barbara. This share price of this company has been in a downtrend for a long time, and I've kept this company on my watch list because I believe it eventually will turn around. I do have this blue line, horizontal blue line. That was a support level which was breached back in August of last year, and as soon as that support level was breached, that became resistance, and the share price of St. Barbara has not tested that resistance level. It got very close back in November last year and is getting close right now. Now, the share price has moved above the two moving averages. It has done that rarely in the past, and over the last 3 trading days, share price has gone sideways after a large jump in share price in one day. That is a bullish move. The next bullish move I like to see with St. Barbara is to see it move above that resistance level at about $1.70. And if we can see the share price move above that, which is only 12 cents away, that would be a bullish move. And I'd say at that point in time that the uptrend in this company, if not confirmed, being very close to being confirmed. So a few things going right for St. Barbara right now, just like other gold companies, including Dacian Gold. But again, the question is, will gold prices continue to move up here? They've just broken out, but just because they have broken out doesn't mean the trend will continue to go up. Now on to a non-gold company, and to be honest with you, this is probably the most enticing chart right now, in my opinion. And that is Servicestream, a much unloved company on the ASX over the past year and a bit. If we go back to the end of 2020, share price of this company was around about $2.40. Some bad news because of NBN or those sort of things, because that's where they actually had made a lot of revenue. And we saw the share price plunge from that $2.40 all the way down to a low of 75 cents. And it looks like 75 cents was a good support level. We saw the share price reach that in September and then reach it again in around February of this year. But the share price then went sideways. So it seems like 75% hold firm. They released some good half-year results in February, or maybe it was full-year results, but good half-year results. We saw really good volume come in. And when you see really good volume come in, when a company releases the half-year results and you see the share price take off, that's a good sign. that is a bullish sign that the market really likes the results, and that could be the start of a shift in sentiment and a shift in trend of the company. And we have seen the share price of Servicestream continue to move up from there. We've seen a potential, or we will see a potential crossover in the moving averages. And this could be the start of a new uptrend in Servicestream right now. Now, on to two buy the dip situations, opportunities. The first one is Goodman Group, a much higher quality company. And this is the weekly chart going back to 2017. And you can just see the share price going up through this period from about $7 to a high of $27. So a nice return for shareholders during this period. Now, again, I've provided the 50-week and 100-week moving average, and every single time the Goodman share price moves into that zone between the 50 and 100-week moving average, that is a buy the dip situation. It happened back in the start of 2018, happened during the COVID-19 financial panic. In fact, the share price of Goodman fell below the 100-week moving average for a few weeks, and it also happened start of 2021 for a brief period, about 3 or 4 weeks. And right now, the Goodman Group share price has moved back into that buy zone, that buy the dip zone opportunity at $21.50. So I am paying close attention to Goodman Group share price because I do think this company has a lot of potential in the future. It's a high quality company on the ASX as well. Now, the last company I'll be featuring in this video is a much higher risk opportunity, buy the dip opportunity. It's not really a buy the dip opportunity, but because the share price has absolutely plunged over the past few weeks. And that is Bell Financial Group. The whole reason the share price has plunged has been because they've been issued with an AUSTRAC notice, and AUSTRAC have reasonable evidence that there's been some dodgy things happening in regards to anti-money laundering activities in Bell Financial Group, and they are being audited. So there is a potential that Bell Financial Group will have to pay a fine. It could be a significant fine at that, but we're going to have to wait to see the specifics of any fines this company will have to pay. And the reason the share price has absolutely plunged because of this AUSTRAC notice is because the market doesn't like risk, doesn't like uncertainty. So the share price has fallen all the way from about $1.90 to a low of about $1.07 in a few months' time. Now, also, the half-yearly results, actually it's the yearly results for this company, the yearly results this company did issue were a little bit down from last year. And I think one of the reasons why they were a little bit down from last year was because the previous year's results were significantly higher than financial year 2019, just reverting to the mean. So nothing to be too much concerned with the last year's financial results. So the market is just worried about this potential fines they'll have to pay with AUSTRAC. Now, if you remember, Westpac had to pay over $1 billion in fines because of the same sort of thing that Bell Financial Group is going through. But more than likely, that was a significant amount of dodgy transactions, and we just don't know the specifics around Bell Financial Group and their anti-money laundering situation. And this is why I wouldn't buy Bell Financial Group just yet. You can remain patient, wait to see the outcome of this audit, and if nothing too much is into it, if they don't have to pay much of a fine, the share price won't recover too quickly because the fear will linger for a little bit longer. So there will be opportunity to buy Bell Financial Group at significantly good value. Now, at these prices, with a 6.5 cent dividend, final dividend, also 4.5 cent interim dividend, that means the dividend yield right now is 10%. That doesn't mean 10% or 11 cents dividend will continue into the next financial year unless the fines are not that much. So definitely put this onto your watch list and wait for the announcement in regards to the AUSTRAC notices. Wait for what happens with their fines. If they even get fines, maybe they won't. Maybe it'll just be some recommendations for them to fix. So again, put this onto your watch list. Just wait to see the outcomes. And if the outcomes are good, you will see a share price pop up, but it won't pop up back to $1.90 straight away. It will take time to get back to that level. And that is the opportunity you have as an investor. That's all I have for these 7 potential buys on the ASX right now. I've never really talked about ETFs before. I might actually do a sole ETF or dedicated ETF video because I am finding ETFs a little bit more enticing, but there are some risks around ETFs, some things not to like about them as well. So 2 ETFs, including my favorite ETF, or one of my favorite ETFs on the ASX, which is the VanEck QUAL. Also 3 potential breakouts, 2 gold companies and Servicestream. If I had to pick the 3, I'd probably lean towards Servicestream simply because the gold companies are highly dependent on the price of gold, and if the price of gold plunges, those companies' share price will plunge as well. And also 2, the buy the dip opportunities, and even though I describe them as buy the dips, one company, Goodman Group, is definitely buy the dip opportunity. Well, Bell Financial Group really isn't buy the dip. It's simply the market is concerned about these potential money laundering issues the company is going through right now. If you want to leave any comments about these companies I feature in this video, if you want any questions, leave in the comment section as well. Last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a great day.